Welcome to Lesson 13 of our Financial Statements course. Today we conclude our look at the income statement. Hello everyone. I'm Matt with the Fundamental Investing Institute. Today we'll discuss the non-operating items and taxes that lead to a company's net income. We'll define these items, look at examples like interest and asset sales, and see how they factor into the final bottom line. An income statement shows the pathway to a company's net profit, also referred to as the bottom line. This includes results from day-to-day operations, but also items outside that scope, as well as corporate income taxes. Non-operating items are shown below a company's operating profit on the income statement. The most common examples are interest expense and gains or losses from selling assets. Interest expense is the cost of borrowed money. Conversely, a company can also earn interest income on its investments. In practice, most companies report their interest expense net of any interest income they've earned. Companies also recognize gains or losses on asset sales, which are typically not part of their ordinary business. Whether they recognize a gain or a loss depends on the selling price versus the asset's carrying value. A gain occurs if the selling price is higher than the carrying value. Otherwise, a loss is recorded. Adding or subtracting these items from operating profit yields the company's pre-tax income. This pre-tax income is the amount subject to federal and state corporate income taxes. Income tax expense is then subtracted to finally arrive at the company's net income. This net income is what we truly mean when we talk about a company's bottom line or final profitability. To recap, the bottom line includes both day-to-day operations and non-operating results. Interest and asset sales are the most common non-operating components we see in financial reports. We use these to calculate pre-tax income before finally accounting for corporate taxes. That concludes our discussion of the income statement. Now that we've mastered the income statement, we are ready to move on to the balance sheet. In our next lesson, we'll begin covering the fundamentals of the balance sheet. Remember, net income is the result of operating performance, non-operating items, and tax expense. Understanding these layers is key to truly evaluating a company's financial health. For more content, please visit our website and remember to like and subscribe to our channel. Thanks for watching, and I'll see you in the next lesson where we start the balance sheet.